Hello traders and welcome to the weekend edition. My name's Des Woodruff here at Grok Trade, and this video is good through Sunday, April 10th, 2011. And we have a lot to go over here. On Friday, the markets closed out with crude oil hitting a 2.5-year high. This is done intraday on Friday, so do not pay too much attention to this candlestick on the daily charts, as they will probably change by day's end. I wanted to get this out early. On the daily chart on the S&P, we run up, all past major moving averages, where we should have turned around and done some sort of pullback. That did not happen. Instead, we build a high base. A lot of people call these flying plateaus. However, you don't ever buy a flying plateau. Skilled, savvy traders buy breakouts or sell breakdowns. Be very careful buying triangles, wedges, flags, pennants, or bases. You want to not play that game. So anyway, what am I looking for? Some sort of breakout over this resistance line, especially over the 1343, and then blue skies after that. However, if we break down from this purple line, which puts us about, you're going to want to write these numbers down. I'm going to throw a lot of numbers at you here. Around, I'd say 1330, 1329, about around 1329. If we get below that, be very, very careful out there in the markets. Now, we also look at the weekly chart. So let's take a look at that. Bring this down ever so slightly. And here's the problem on the weekly chart. We are slowing down with the doji for the week. We didn't even get to this level. That level puts us at 1344. And we're already showing relative weakness. You see the CCI dropping here below this 90 line, 90.0 line. So if this starts to drop, we are in the makings of a double top trend reversal pattern on the weekly. That is no good. For us to keep going here, we need to get over 1344, and I would like to see it get over that whole number of 1350 and rally up quite nicely, re-intersecting with this trend line that we have. So we do kick off earnings season going into this next week, and it'd be interesting to see how earnings will play a part in the market's movement. But this week was very choppy, very flat, not conducive for swing trading, as you can see here. Much more conducive for those that are day traders. And let's look at the monthly. Monthly chart. We had this big doji or hanging man pattern. And so far for the month, we have made a higher high. You can see that right there. No sell-off has commenced. However, the area that I'm watching for is 1322. If we do drop below that, that's an area that's going to send me thinking, could we start dropping? After that, I'm looking at 1300 as a support level, and if we can't hold that, ouch. But we are very toppy here on the monthly chart by anybody's stretch of imagination. Here's the Dow. Dow 30. Come up. We kind of have a high base, but it has a rounded top to me. And you can have a reversal pattern that's called rounded tops. And that's kind of what we're seeing here on the daily. We're above all major moving averages. However, if the S&P breaks out, I expect to see the same on the Dow, or inverse movement to the downside on the S&P. I'd expect to see that reflected on the Dow also. And here's the weekly chart, not unlike the S&P. hitting our head right at major resistance and doji out on it. We doji out here at that resistance point and this trend line coming up. Gang, the weekly looks really bad to me. So if we start off the week really bad, meaning that we go lower than, I would say, 12,325, if we get lower than that, it could be a brutal week. And if it's a brutal week, that could be a start of a brutal April. And you're hearing it right here. I know I said this a few weeks ago. I'm just keeping that on your radar screen. So that's why I am flat going into the markets. Let's look at the NASDAQ. A lot of you are in Baidu and Google and Microsoft and IBM and all sorts of tech companies. And let's take a gander at what we're seeing here. On the daily run, up, 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 a very, very choppy high base. And this high base looks more bearish to me than bullish. Look how red it is. It just looks like there's a high bird bath of blood up here in this area. And so I want us to be very careful on the technical side, especially if we close down here for the day below this 2800 mark, because that should act as a support, not, it shouldn't be below that support area. If so, just be careful. Just be careful. And let's bring my weekly back up here. Weekly, relative weakness, we're not at this, kind of like the S&P, not quite at this level yet, but we have resistance at 2834, but we're dojied out already. If we drop, we'll make a lower swing high, and that would be a bad week to start things off, and that would be a low of 2775. If we get there, I think we could be in some serious trouble for the week. And here's the monthly. The monthly chart. We've made a higher high up here. You can see this. Higher high. But if we start to drop here, watch out. We have a big bearish divergence here on the stochastic. Stochastic is still registering at 92.8 on the monthly chart. That is overbought and largely. Remember, stochastic is an oscillator, not an indicator, and it is technically a banded oscillator, which gives us great measurements of things that are overbought or oversold, and that's why I like to look at them so closely on the bigger time frames. And Russells, let's take a look at the Russells here. On the daily, you can see no base here. The Russells is dropping. Now this concerns me as a swing trader and as an investor. You have small caps lagging the markets in a big way. So here you have investors leaving small caps. Why? Because small caps bring more risk, so people are sheltering themselves from risk at this moment. And this could be a leading indicator to what we might expect on the S&P and Dow. So that is of some concern, should weigh, and you should give that some merit in your own analysis. The Russell's weekly, though, what's interesting here is we're making a higher high. However, we have a gravestone doji for the week. That is a bearish doji. And if we start to drop here, anything below 1843 is going to be a level of concern for the Russells. And here's the monthly. Monthly, we're at a resistance point, up, up, up. We have made a higher high at a major at 850, and we touched that trend line. I mean, this has a much better chance of dropping than going higher. However, I'm flat. I am not making a call that we are going to drop, but we are set up for a drop. And if we do get a drop going into this next week, that could be the catalyst that might send the monthly heading southbound. And if the monthly starts heading southbound, we're in for a rough rest of the spring and a rough summer. At least the bulls are. However, What we don't want to be is slave to market trends. And not us, not here at Grok Trade, and especially not you, all of those who are Grok graduates. We're not slave to any trend. What we do is we play what it is that we see, and we have rule sets set in place. So we we trade with our eyes wide open, with the fog cleared, and it's all about trading well, letting the byproduct be profitability, with a very acute focus on risk and money management. So, let me take this moment to do a shameless plug on the 201s. For those of you who have not taken advantage of that yet, shame on you. You're out there floundering, thinking that your books are going to help you become rock star traders, and you're scouring the internet for free information. There's a lot of data there. Just like you could probably go and get all the books you could possibly ever need to learn to play the game of golf or learn to fly a plane. But are you going to just stick with books and scouring the internet to help you become a rock star golfer or a fantastic pilot? No, it takes getting the best of training, and it takes getting the best in coaching, mentoring, and that person that could be your trainer. But a lot of you are simply just not ready for mentoring yet. You're just not developed enough in your trading to get the most out of that. And so I highly recommend the 201s. Why? Because I'm the one that put them together. We have many years of trading experience, and we have put together 6 hours worth of the secrets and tips and tricks to trading. And it's a $2,500, and I'm not joking there, and that's confirmed, $2,500 price tag or worth on that you can get from us, and it's all online, for $697, and that price will only go higher. So anyway, take care, safe trading. We'll catch you on Monday.